What's up, guys? Welcome to Breaking Stereos. Today we're going to be talking about the top 5 stocks under $50 for June 2020. Hope you guys enjoyed this list and you're looking forward to making as many gains as I do. But before we get into the video, make sure you hit that like and subscribe button and comment down below. It really helps us grow this channel and I appreciate all that you guys do for me. Let's get into the list. With that being said, this is my top 5 list of stocks under $50 for June 2020. Number 5 is Snap. You may have heard of it. It's a small social media platform that at one point had the eyes of Mark Zuckerberg and Facebook. I have to give it to Evan. I didn't think they would make it 3 years ago when they initially IPO'd. But after 3 years of being a publicly traded company, they're finally back at their all-time highs. Snapchat comes in at number 5 because I have a few concerns about them. When Snap initially IPO'd, I stayed far away from them just because at that particular point, they weren't a company that I felt safe investing in. Even though there were tons of people on the platform, see, people on your platform don't normally generate into revenue. And that's what we saw for the first 3 years of Snapchat. They went from being as high as I think $32 or so, or $28 to dropping all the way down to single digits. If you were an initial investor in Snapchat and you held, kudos to you because your boy couldn't do it. Evan and the rest of the company was just a little bit too immature for me with the decisions that they were making. And boy, what a difference 3 years can make as Snapchat moves back up into the high 20s. With the uprising of TikTok, I am very interested to see how Snap will stay relevant. I mean, I hear a ton of the Zoomers love the platform and a lot of the millennial influencers are moving over there. And if Snap can't demand the Zoomers to come back over to their platform or give them something to entertain themselves, I can see Snap struggling within the next few years, especially with how dominant TikTok is, and they're not even giving out revenue yet to their influencers. So if TikTok finds a way to allow influencers to monetize, look out, Snap. But besides all of that, recently Snap has signed a partner agreement with Zynga to increase their app gaming capabilities, which should keep users logged on and seeing those good old ads. And ads are always good for revenue, but partnerships also mean more revenue for Snap as well. So clearly Zynga sees some type of benefit with working with them, so they must be worth a shot, right? But I'm still a little bit concerned about Snap's future. See, in order to be a strong social media company, you really need great data and strong predictive algorithms. Companies really want to know that their advertising dollars are hitting the target audience in which they're paying for. Snap has really struggled with this in the past, especially being a relatively new platform, and it'll be really interesting to see what they do in the future to make companies feel like advertising on their platform is worth it. Snap also needs to acquire something. I don't know what that something may be, but acquisitions have really helped Facebook stay the social media giant that it is. Think about when Facebook acquired Instagram for $1 billion and then it turned it into the platform that it is now. So just think about it. If Snap can find a really good acquisition, they can definitely continue to grow. So number 5 is Snapchat. Number 4 is a small ETF by the symbol of FAS. Is a 3 times bullish ETF for the financial services sector. The reason why I love this ETF is because if you have a bullish outlook on the stock market, you know that we cannot rise without financials. How can we do anything without the banks, Visa, MasterCard, and just money? We need money to go up. So if you have a long-term goal that the market will bounce back, FAS is the place for you. But being that it is a 3 times bullish sector, it does mean that if the market is down, you will see massive losses. And when I say massive, I mean maybe 20 to 30%, but you can also bounce back 20 to 30% as well. Its top 5 holdings are Berkshire Hathaway, Visa, JP Morgan Chase, MasterCard, and Bank of America. And if those aren't really good companies to get you excited, I mean, Warren Buffett, Berkshire Hathaway, all of these companies were extremely strong before coronavirus hit, and then of course we saw the feds jump in and lower rates down to almost 0, which is why the financial sector is really hurting right now. But as soon as the economy starts to bounce back, there will be nothing for all these companies to return to their previous glory. FAS hit a low of $14 in March and has slowly been climbing itself back up to its all-time highs and currently sits at about $32 a share. When financials are up and the Dow Jones is up, FAS will be up as well. It is, however, a very slow play because this recovery of the market seems to be flattening out. So I would highly suggest buying a little bit at a time because it was at 100 a few months ago. So I would buy a little bit here, a little bit there, a little bit there. Stick to your rules, especially your investing rules. FAS is a very, very long bullish play on the market. So good luck. Number 4 is the ETF FAS. Number 3, Atlantic Sustainable Infrastructure. What does that mean? I don't know. But I do know I believe in renewable energy. It just seems to be the smart thing to do in the way that we're trying to go as a world, especially with the way oil prices have looked in the past couple of weeks. Have you seen the oil prices? See, AY is a company that's all about growth and is gonna ride the wave of renewable energy, and I would like to hop on that as soon as possible. There will definitely be some bumps in the road with this one, especially as renewable energy becomes more mainstream. So expect some bumps with this one, but continue to use your investor rules and buy those dips because this is another really long play. If oil was as big as it was, renewable energy is next. For coronavirus, Atlantic Sustainable Infrastructure was actually hitting new 52-week highs consistently every week. In 2018, they had a few financial problems where their revenue kind of dipped, but since then they've been able to bounce back even stronger for the past 2 years and have positive net income. With oil struggling and people looking for cleaner energy, AY is just a stock waiting to explode with the right market. We are expecting about a 20% gain before the end of the year from the current prices, and we really enjoy AY. So happy trading. Number 2, in a personal favorite of mine, NET, short for Cloudflare. I'm a software engineer and I'm still kind of upset at myself because all I do is websites, and Cloudflare is what all my websites are backed up by. See, Cloudflare provides an extremely important resource to all web developers and major companies. Content Delivery Network. Basically what CDN is, a geographically distributed network, meaning that geographically we know that means globe and locations, but basically all it is just there are different proxy networks all throughout the entire world, and depending on where your actual customer is trying to hit your site from, CDNs will distribute your content from the closest server. So if my company is based out in America and maybe I'm in Illinois, but my customer is in Africa, instead of them sending the signal all the way over to Illinois to my computer, it will find a remote server and deliver the content from the closest server to Africa. This increases the speed and throughput to your customer, giving them a better experience. How freakishly amazing is that? Cloudflare has been around for so long, and when they became public, it was a no-brainer to buy. They are one of the leaders in cloud security as well as CDN. And if you don't know anything about cloud, think back a few years ago when it was like, it's in the cloud.
It went up to the cloud.
You can't get it down from the cloud?
Nobody understands the cloud. It's a mystery.
But no one knew where the cloud actually was. But the reason you don't know where the cloud actually is because the cloud is technically everywhere. No, it's not some floating infrastructure of databases, but it is just a network of databases. So as cloud infrastructure becomes more available to not only major companies, but also small time businesses, cloud is going to be where everyone stores their data. And why would you not want to invest in a company who's been doing that for a very long time? Cloud is finally in a mature enough state that it can be accessible to everyone. I mean, your iPhone is backed up into the Apple cloud. You already have experienced the benefit of cloud. If you've ever lost your phone, got a new phone, and nothing was missing, that's how amazing cloud is. And Cloudflare is the place to go, especially right now as they just IPO'd a few months ago. So if you're looking to get into some really good growth and a company that has a really bright future, NET Cloudflare is the way to go for technology and cloud security. Number 1 is a stock underneath $3. Can you guess what it is? Of course you can, because a lot of people don't know about it. Milestone Scientific. It is the cheapest stock on this list and is currently facing all-time highs at about $2.81. I recommended Milestone Scientific way back when it was $1.21, and I've already received a 100% gain on my investment, and I'm putting more money in. I really enjoy this company. And to be completely honest here, I don't really know what they do. I do, however, know how to read a financial sheet and look at a chart, and neither one of them actually match up either. Milestone net income is about -$5 million. It is the highest that it's ever been, but they've also been generating a lot of money as well. I can't really tell you why it's been going nuts since the end of 2019. I've really been trying to find it, but for some reason, even after coronavirus, it doubled back up extremely strong. So something is moving this company, and I'm guessing it's not a pump and dump since it actually doesn't spike. It goes up consistently, and that's what you like to see. Nice natural growth, nothing too high or too extreme. MLSS moves like a major company would. It's very even kill. Right now I have a price target on about $3.10 on this, which is some really good gains if you get in right now, but I think this may be a long play here, so to get to 5 would be amazing. Penny stocks are very hard to predict, and this is one of them. This just been probably one of my favorite penny stocks of all time. I love the consistent move ups. Like I've said, you never get any major spikes up or any major spikes down, which really gives me confidence as an investor to keep my money in them, and any dips I do buy more. There's a reason why MLSS is going up, and until we figure it out, I'm an investor. So MLSS comes in as my #1 stock to buy in June 2020. That's under $50. Heck, this is even under 5. Please make sure you hit that like and subscribe button if you have enjoyed, and let me know what your top 5 is for June 2020. Good luck and happy trading. And thank you guys for watching this video. Make sure you hit that like and subscribe button. Welcome to Breaking Stereos. This is our community, our voice, our platform. Thank you very much and take care.